What's up, everyone, and welcome to this Bitcoin market update. In these videos, you can get a sense for where Bitcoin might be moving next and learn technical analysis in the process. So let's get started here on the monthly time frame for Bitcoin. There is not much to talk about on the monthly besides this upcoming R3 pivot level where we are up here at about 63.1. We have not broken the previous month's high of 61,925. We got up to pretty close, 61,750, but did not quite get there. So we'll see if we end up breaking that in the next 18 days here. Let's go to the weekly time frame. Weekly time frame we had the weekly close yesterday, so we can talk about the candle here and what this is telling us. So we're coming off of this low that we formed here, a higher low in comparison to this one. And if we look at the price action here, we can see that we had a longer upper wick here on this candle, but then we invalidated that as bearish with the next subsequent candle breaking its high once again. And now if we are to try and form a lower high in comparison to this one, we will need to break the low of this candle right here, and that would be down here at about 55,490 depending on the exchange that you're on. So that's a pretty decent ways down from where we're currently trading at now. That's about a 7.5% decline. It's not saying that we can't get there, but that is a ways down from where we're currently trading at. I think that this next week we'll have to see how the price action develops on the daily time frame. It's very hard to say if the weekly time frame, if we're just going to blow up immediately or if we're going to come down and consolidate once again with another higher low in comparison to this one, and then try and go up for a new all-time high from there. So let's go to the daily time frame here and talk about what we're seeing here. So I have a couple things on the chart right now. If we take the pivots off, the main level to be aware of is this gray level right here. Now, the reason this is a gray level and it's a support zone now is because we finally closed above it right here with two candle closes above this zone. We talked about this in yesterday's video, but this is the main zone that we rejected off of right here, pushed down, came into, and have not been able to close above until just now. So a retest of this level would be bullish in my opinion, and I am looking to go long here. As you can see, based on my long position tool right here, these pink lines are my entry points, and this is the way that you can kind of go about planning an entry for yourself, is using the long position tool here on TradingView, which you can find right here. And you can also, if you're going short, use the short position tool. If you don't know how to use that tool or go long or short, you can check out the video that I posted. It is a tutorial on how to use the long and short position tool to calculate your risk to reward ratio and the percentage away from your stop loss that your entry is, as well as your profit potential. It's very useful and it saves you a lot of time. And once you have that pulled up and you have your areas that you're thinking about buying in based on your technical analysis, you can say, all right, I'm going to layer 33% of my position here, 33% of my position here, and 33% of my position here. And I'm going to put my stop loss below this level, because if we go below this level, then we know that this level is not, in fact, a support zone, and we should expect that we're going to continue to go down from there. So we'll see how this level ends up playing out, but you can see that this level held on the first test here, as well as I guess you could consider this the second test if you're considering like we have to go below the absolute low of the level to be considered a full test. You can consider this one test, and then this big move two tests, and then we push through it. So now we might see it push down and then a subsequent bounce off of it to these levels right here, which is the levels that I'm looking to target. This first one, 63,149 roughly, is that weekly and monthly pivot level that we just looked at. And then the next level after that is this roughly 6,500 level, and that's this R1 daily pivot up here. And then the final level here is a roughly about 70K. And this is the target for the inverse head and shoulders pattern that we might see play out right here, which would give us a target of about 70K. If you measure from the head up to the neckline, it's roughly 9,600. If we take 9,600 up, it takes us to about 69.5. So it's right around that zone. But I imagine it'll probably go up to 70K if we go up to that level, just because that psychological 70K level. So we'll see what we end up getting here. You can see that we have these longer upper wicks here of people selling into this rise in price. You can see we're starting to get this increase in bear volume right here after the declining bull volume. This is not surprising after you see this decline in bull volume to see the next daily candle have a red day. So we'll see what ends up happening over the next coming days, but I am going to go long on this zone, targeting these levels. It's got a pretty good risk to reward if we go up to the top level right there. Even if we go down to the 65.50 level, that would still be about a 2.75. And then if we are only to go to the 63.155 range, it wouldn't be as good, be about 1.8. But I honestly don't think that we're going to go any less than 65.5 if we do end up going up, because everyone's going to recognize, oh, we're going to new all-time highs again. We're in price exploration. I'm going to buy inverse head and shoulders, very clear. That's going to 70K. And then, people will buy all the way up until we get to 70K, and then people will get skeptical again. So let's go down to the lower term time frames real quick, see what we're dealing with there. If we go to the 12-hour time frame, get rid of this for a second. If you go to the 12-hour time frame, you can see this gray zone that we are currently bouncing off of right here. This zone is our level from right here, where we have a high, low, lower high, lower low, and a breakdown. And then you can see if we attach our rectangle to this, and you can use this, rectangles are right over here in the TradingView toolbar. And you can use those with the magnet, and what you do is you have your rectangle. You can pull it to the level that lines up with your candle, your support or resistance level, and then you can snap, because you're using the magnet, and I like to use the weak magnet. You can snap the rectangle right to the tops and bottoms of the candle, and now you see we have our level right here. Whoops. And then you can pull this across, and you can see that we bounced off of this level once here, long upper wick, and then since that point we're trading down. Now what we could end up seeing here is a grab of the liquidity below this low, and then a subsequent rise in price. Now the development that is key to watch here is the daily RSI, because if you look, the daily RSI is actually printing a bearish divergence, and that's where we're getting higher highs in price but lower highs in the RSI, signifying this push up in price was weaker than the subsequent push ups in price that we had right here. And so if we end up breaking this low down here to about 59,266 from the previous daily candle from yesterday, April 11th, that will end up validating this RSI as a bearish divergence, and we'll see if that ends up driving us through this entire gray zone and down to new lows, or if it just drives us into this bid area that I have drawn here, and then we bounce from there. There's really two scenarios, but I like the risk reward here. I also really like, if you look at the Ichimoku cloud, Ichimoku cloud still looking really good in terms of continuation with our most bullish scenario here on this indicator. If we go to the 4-hour time frame, we can see that one, there's a lot of noise here up at this range, and let's take a look at this just real quickly. We have a consolidation here where we have high, low, lower high, higher low, and then higher high right here, we close above this high, but then the next candle we close back below it. And so we did not validate a 4-hour bullish trend here and continue that 4-hour bullish trend that we've established from back here. So now we're declining. You can see that if we look at the pivot indicator, you can see that we have an hourly pivot right down here, which conveniently is below the key low right here that we were just talking about, where people's stop losses are. Now, how do we know that where people's stop losses are, right? Because if we're analyzing price, we need to know where those are, because that helps you analyze and determine where you think the whales in the market, the big players, are going to have to push price to fill their orders, because they need to trigger those stop losses. So then they have enough liquidity, enough money is on the order book for them to actually fill their positions. Because if you have $100 million position, you can't just buy $100 million, at whatever price you want. You need there to be liquidity so you don't move the price significantly when you buy or sell. And so what the whales might do is go down, wick into this low right here, bounce off of this pivot, and then go to new highs. Now, the other thing to keep in mind here is, where is the other liquidity, right? So the other liquidity is above this high. And how do we know that? So this is what I was getting to, of how do we know that? You can see that we have this increase in bull volume, above average bull volume here, above the moving average. And the most recent low would be right here. So this is where people would put their stop loss if they went long in this range. And so below that low are a bunch of stop losses. So if the whales push the price to this level, people get stopped out of their long positions, meaning they have to sell. And then people can, the whales can buy those people's positions that they're selling to them, and then the price can go up. The other level is right here, this key high, because you can see we have this increase in bear volume right here. And so the increase in bear volume is telling us a lot of people went short on this rise in price, and they're going to put their stop loss right above this key high right here. And so what can happen is what's called a short squeeze. And so what a short squeeze is when big players in the market push the price they push the price up and trigger a bunch of people's stop losses, and potentially cause the price to increase rapidly as a result. Because there's so many people's stop losses getting triggered, and there's so many people forced to buy back their positions because they went short, it makes the price rise very rapidly after those stop losses get triggered, and therefore causing what we would call a short squeeze. The shorts get squeezed out of their positions by their stop losses getting triggered. And so that scenario could end up playing out here, where we grab some liquidity down below, and then we go up and cause the shorts to get, force them out of their positions here. And then we rise in price up to, 65K level, or at minimum, this R1, which is up here to about 62.7, and then 63.1. Next level is at 65.400 roughly, right around that 65.5 level. And then up from there, you go up to the 69K level. And then from there, it's that 70K level. So those are the key levels to watch. You don't need to, memorize them. You can use the pivots indicator to see the resistance zones on this rise in price if we end up getting it. If we do not, and we start actually trending downwards, like pretty significantly in the coming days, that is when I'll look to flip my positions and go short. But for that to be the case, we're going to need to experience a pretty significant drawdown down here below this gray zone before I start to get bearish. So the last thing I wanted to talk about real quick is the 4-hour Ichimoku cloud. If we look at the 4-hour Ichimoku cloud, it's setting up absolutely perfectly here for continuation. We're seeing the scenario that we want to see in price, where the Ichimoku cloud flips to be bullish right here. It flips to be green. We get this blue line, the Tenkan, to cross below the red, which is bearish. But then the price goes above right here. It closes well above these zones. The Tenkan and the Kijun tighten up here. And then right here, the Tenkan is crosses above the Kijun, and that is a bullish sign. If you're an Ichimoku cloud trader, whenever you see the cloud setting up for this, where you get what's called a TK cross above the cloud like this, and you're in perfect position with the clouds green, Tenkan above the Kijun, price above the Tenkan and the Kijun, you're in good position to continue to go long. And so the entry here, if you haven't gotten into an entry already, would be my bid would be down here at the Kijun, which is down here at about 58,620. So that could end up looking like some sort of quick drawdown, grab the liquidity, hit the Kijun, hit the pivot, and then go up from there. Otherwise, we may experience a more significant drawdown into the daily zone, and that's why I have those bids set down here around 58,000. That's all I got for this one, guys. If you liked the video, give it a like. We really appreciate that. Subscribe for future educational content around cryptocurrency and blockchain technology. And until next time, onward and upward.